Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. Our website is www.stochastic-magd.com. The title of this video is How to Trade Forex Under Pressure. How to trade Forex under pressure. Okay, let's get started. I do not like to waste your time. Okay, so I want to get to the point, and in this video we will discuss, okay, the high frequency trading in Forex. Okay, high frequency Forex trading. What is the implication of the high frequency traders in the Forex market? We'll also talk about the market distortion, how the Forex market at this junction, okay, is distorted. We'll also talk about the pound-dollar trading. We will talk about the euro-dollar trend and market sentiment relating to the euro-dollar trading. And finally, we will talk about FS trading tips. Let's get started. First and first, high frequency Forex trading. What is happening? Because you are my friend, okay, I want to share with you what is going on in this Forex market, so you may understand, okay, why the Forex market has changed. Okay. In 2008, we have what we call the financial crisis, and since then, the market has changed, and the Forex market has changed. Few years ago, it is possible for traders to scalp Forex trading, okay, to make a quick and fast profit when trading Forex, because the price will move very, very fast. In before 2008, okay, we do not have many high-frequency traders in the Forex market. This is very important for traders to understand. So you can quickly place a trade, and within 30 minutes, you can get 30 pips, 30 pips, very fast. Because we do not have high-frequency traders, okay, in the Forex market at that time. There were few, okay, automated Forex trading tools, but they were not very popular in the Forex markets. But since 2008, the music has changed. So from 2008, in fact, since 2011, we have seen more and more high-frequency trading activity in the Forex market. Because of these new, okay, currency traders, which we call high-frequency traders, coming to the Forex market, the price is not moving very fast as it was in 2008, before 2008. So to get 30 pips in Forex is taking longer. You may have to wait some time, up to 1 hour, 2 hours, even sometimes even up to 3 hours before a currency pair may move up to 30 pips. It does not mean that the Forex market is not moving very fast. It's very liquid market, and the price moving very fast. But in order to have 30 pips, even during the Asian session, it's possible for traders before 2008 to have 30 pips within 2 hours. But now, talking about the time extension during which one can get 30 pips when one is scalping or day trading Forex, that period has been extended. You need to be aware of it. So since 2008, we have more and more high-frequency traders coming into the Forex market. Because of the high-frequency trading activity in the Forex market, or the increase in the high-frequency trading activity in the Forex market, it is not possible to get 30 pips very fast in the Forex market. Myself before, when I'm day trading, whenever I place a trade, I buy or I sell a currency pair very fast, within 1 hour, I can quickly bank 30 pips, which means I trade constantly grabbing, okay, 30 pips here and there which is very, very good. But now when I place a trade in order to get 30 pip, sometimes, I'm not saying always, but sometimes it may take up to 2 hours, even more sometimes, before you get your 30 pip. Because as a day trader, you do not have the whole day, you do not want to hang around, you want to grab your profit and go fast. Why? It's now difficult to get 30 pip very fast in the forex market. This is due to the high frequency trading activity. You have to understand that the high frequency traders are using what we call algorithm automated trading tools in order to scalp in the market. This scalping activity is not from ordinary traders or retail traders. It's from the bank, the hedge funds, big institutions, have decided to scalp the market. In the past, big institutions, financial institutions are trading for medium term up to long term. They do not scalp very much, So they will remain in the market and they will propel the price for a long period of time, allowing an ordinary trader, retail trader to scalp and grab 30 pips here and there trading forex. But since 2008, with more high frequency trading activity in the forex market, it's now difficult to get 30p very fast in the forex market. All right. If this is true for you, you may put your comment below this video. If you agree with what I'm saying here, put your comment below. If you disagree, put it below. For a high frequency trader, these algorithms, they are not in the market to grab 30 pips. They are in the market to grab 5 pip, 10 pip, 15 pip, even sometimes 3 pip very fast. So for the price to go up all the way to achieve the 30 pip, before the price reaches the level of 30 pip, the high frequency traders are already taking profit, which means on the lower time frame, my favorite time frame, like 3 minutes, you will see that the price will go 10 pip up or 15 pip up, and quickly we change direction because the high frequency traders are taking profit ups and down, grabbing 10 pip, 15 pip, 5 pip, 3 pips here and then, which is forcing the price not to trend very fast. But sometimes, though we see high frequency trading activity in the forex market, sometimes the price will move fast due to economy news or due to some market sentiment. The price may go very, very fast. Or sometimes you will see that the price will go very, very fast in the forex market after, the big institutions are liquidating their position, which means they are closing either their bullish position or they are closing, their bearish position, bullish or bearish position, they are closing it, and you will see the price will go very, very fast. One example that we see last Friday, in fact, during the Asia session, when we were discussing, the referendum in Scotland, you understand? Last week, that's why we're going to discuss also the pound-dollar trading. Last week, there was an election in, there was what we call a referendum in Scotland, where they were voting to decide whether Scotland will be part of United Kingdom or not. All right. So we noticed that I will go now to the 30-minute chart. During the Asia session, when they were counting the votes, these big institutions were closing their bearish position. And if you were in the market that time, you will quickly grab profit because the price went up within 2 hours, always 2 hours or 3 hours, up to 200 pip very fast, because these big institutions, these high frequency traders, these big market players, the hedge fund, the banks, the big financial market participants are closing, their bearish position. They were selling the pound-dollar currency pair before, and they decided to close their position, and the forex market was moving very, very fast. You need to understand that this is about the high frequency trading activity in the forex market. I will not dwell on this very much. I will move swiftly to the next topic, which is distortion, the distortion that is taking place in the forex market. The distortion that we're going to discuss is that, as I told traders in my previous video tutorial that we have posted at George Trio channel on YouTube, subscribe for free and know exactly what we are talking about. We have I have said to traders that the market is distorted at this point in time. In normal condition, the dollar yen should be going down, and the euro USD and the pound dollar currency pair should be going up. But because of the situation regarding Scotland, okay, you remember? So go and watch that video. I don't want to, okay, go back to the same discussion again, all right? The market is distorted. So there is a, okay, outflow of money out of the Eurozone, out of the British pound, out of the euro into the dollar. All right, it is a safe haven. The currency that the market consider as a safe haven is the dollar at this point in time. Though the dollar yen is going up, remember that the market is distorted. That's why we titled this video, How to Trade Forex Under Pressure. Anyone that is involved in the Forex trading at this point in time, he or she is trading under pressure because the market is distorted. You are under pressure from the high-frequency traders, and you are under pressure because of the distortion that is now taking place in the Forex market. In the previous video, some of our previous videos are highlighted to traders that high-frequency trading can create a distortion in any market. Before 2008, we see more high-frequency trading activity in the stock market. Currently, we have also high-frequency trading activity in the stock market, but the level, talking about the level of high-frequency trading activity in the Forex market is higher than the stock market because the Forex market is more liquid than the stock market. You need to know, you need to understand. So, understand high-frequency trading activity in the Forex market. Understand that at this junction now, okay, the Forex market is distorted. What I was saying to you before, that if the big institutions are closing their position, the price will go very, very fast, okay? You need to know why, okay? So this is Friday here. You can see that during the Asia session here, the price went up very, very fast, okay? It went big time during the Asia session, all right? You see here, from the level of 16371, the price went all the way up to 16520, very fast. You see here, you see 16373, it went quickly to 6458, which is nearly 100 pip within 2 hours. And then there was a bit of consolidation here. And then quickly here for this level of 16418, very fast, it went to the level of 16520, which is another 100 pip. So within 4 hours, we have 200 pip because of the referendum that was taking place in Scotland. The big institutions were closing their bearish position, and the pound dollar currency pair was going up very, very fast. The next topic that we're going to discuss in this video is about the pound dollar trading. As I explained to you before in a previous video, all right, very, very important, I highlighted some key levels for the pound dollar currency pair. This is a beautiful currency pair that I recommend to TSTW24 traders. If you're trading for it, it's a beautiful financial instrument. In the previous recording, which I already mentioned to you, at Joe Trio channel, okay, watch our the latest 4 videos that I recorded. I was talking to traders about what is happening in the Forex market. Very important that you watch it. I highlighted some key level. The orange line, if you remember, this is the smart median line for the pound dollar currency pair, which was at 15536. Do not forget those key level. I also highlight this level of 15179. Do not forget this key level. In that video, I was also mentioning to traders this green line here, which was what we call the cycle point. You remember? Price went down all the way here and returned back to the starting point. And I was telling you that the price has a high chance to pull back to this level of 16161. Look, last week, that's why it did stop. The green line. See how it stopped on it on the dot, 16161. Ordinary traders spend their time paying attention to technical indicators. Professional hedge fund, banking institutions, banks pay attention to key levels. The price always moving from one key level to another key levels. We talk about the 6 critical price level, okay? We talk about the psychological price level. We talk about, the equilibrium price levels. We talk about key support, key resistance level from the yearly chart, quarterly chart. This is how professionals are trading. As you can see, the price went to retest, okay, the the cycle point, which is another key level on this weekly chart of the pound-dollar currency pair. What I will say to traders at this point in time, so in fact, I'm combining the topic of pound-dollar trading and also FX trading tips. So the tips, talking about the Forex trading tips, priority to bullish signal for the pound-dollar currency pair at the level of above, at the level of 161.61. The green line here, priority to bullish signal, because the price break above the cycle point. You can see when above the green line. Now it came back to retest the cycle point. Priority to bullish signal above it. But before we continue talking about the Forex trading tip, which is the last topic we're going to discuss in the video, I need to share more tips with you right now. Is the pink line here. This is the short-term equilibrium price level for the pound-dollar currency pair, talking about the pound-dollar trading. All right. So though we are just saying priority to bullish signal above the green line, 161.61, the short-term equilibrium price level for the pound-dollar is 164.68. So though if the price going down from the green line to the pink line, as soon as it reaches the pink line, okay, grab some profit, allow it to go above the pink line to retest it and to find a support above the short-term equilibrium price level before buying it. Why? Okay. Why? That's a very good question. All right. So we watch this trend line on the weekly chart. There's a common central line. It's broken. So price break above, below, it says below this blue trend line on the weekly chart. It's looking for a better support level. Now it's retesting this support level, which is also the cycle point at 161.61. But do not forget the short-term equilibrium price level at 164.28. It makes sense? It is also powerful. So the price may consolidate between the green line and the pink line. But if we find a support above the pink line, we are likely to bring it back to retest probably, okay, the blue line here. As always, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Talking about Forex trading tips, what I will say to, okay, TSTW24 traders is to look for best setup on the third best time frame if the price remain above, okay, the green line. So be very patient and watch carefully for the best setup on the third best time frame. On this weekly chart, you can see that we are still in this blue small, okay, declining channel. So the sentiment is still bearish, okay, at this point in time. Why? Going to the next topic, which is the euro-dollar trend and market sentiment. I'm going to bring on now the euro-dollar, the trend, and the market sentiment. As I told you, this currency pair is distorted because in the previous video that I talked to you about the ECB, all right, they have devalued the euro, they have cut interest rate, and they are talking about quantitative easing, which means they will print more euro. The market sentiment relating to the euro is bearish. Give priority to bearish signal as long as the market sentiment is bearish towards the euro. Give priority to bearish setup, because talking about quantitative easing, money printing, okay, cutting interest rate, the market will be prepared to look for opportunity to sell the euro. So concentrate on sell signals on the edge, All right, this is about the euro USD. Now, the next thing I need to mention to you, the euro USD, is the leading currency pair. So though we are expecting the pound dollar to go up, if the euro, which is the leading currency pair, continues to go down, that may have a negative impact on the pound dollar currency pair. So you need to be very careful if you are buying the euro USD at the time when the pound dollar, at the time when the euro USD is still going down. This is what we see last Friday. You can see that during the Asia session. I'll go back again now to the hourly chart for the pound dollar currency pair. You can see that it was going up nicely, that it normally should continue to go up to recover all the way to 166.00. But as soon as New York was open, the market will analyze, reevaluate everything. They say, well, okay, the situation regarding Scotland is now finished. Okay, there is no separation between Scotland and the rest of the United Kingdom. The market sentiment has improved a bit relating to the pound dollar currency pair, but because they know that the euro USD is this market sentiment and the trend is still bearish, that that market sentiment, the Euro USD trend, and the market sentiment relating to the Euro USD has had negative impact on the pound dollar currency pair. This is about the correlation between currency pair and also talking about the market, the leading currency pair. So we are a bit under pressure. Though we want to buy the euro, though we want to buy the pound dollar currency pair, we know that the Euro USD is the leading currency pair, and the market sentiment and the trend is bearish. Talking about the quantitative easing, money printing in the Eurozone, and catching interest rate in the Eurozone. As I explained to you in the previous video, we need to have more bearish data from the United States, probably excellent economy news from Japan before the distortion that is taking place in the Forex market will end. It makes sense? It is also powerful. I went above my 20-minute time. That was not my expectation. Okay, so I will continue. Okay, because I was trying to stay below 20 minutes. I'll go over it now. So I'll just continue now to add one I need to tell you here. So for TSTW24 trader trading the pound dollar currency pair, we want to concentrate on the third best time frame, looking for the most gorgeous setup. Draw your trend line on the third best time frame. Know where are the key levels, which are highlighted for you now. The short-term equilibrium price level, the small median line, the key level that are highlighted for you on the weekly chart. But at the same time, as you can see, one above the green line, which is the cycle point, now it's retesting it here. All right. But as always, as we are trading Forex, we are not trading one currency pair alone. If you are trading Forex, you are involved in the currency pair correlation. The leading currency pair is the Euro USD, and we know that the pound dollar currency pair usually will move in the same direction like the Euro USD. So the pound dollar is in a funny situation, putting us under pressure. Though we want to look for opportunity to buy it, if the Euro USD continue to go down, that may have a negative impact on the pound dollar currency pair. In normal condition, in a healthy market, the pound dollar currency pair should be going up while the Euro USD is going down. That may be a divergence between the Euro USD and the pound dollar currency pair. In order to have a valid divergence between the Euro USD and the pound dollar currency pair, this must be this should be supported by fundamentals, expecting excellent economy news coming from the United Kingdom and also from Japan. All right, we will see how the market will adjust itself. At this point in time, as I explained to you, the Forex market is highly distorted. First, one of the reasons is the high activity of the high-frequency trader in the Forex market. All right. Second is because the ECB has decided to devalue the euro at the wrong time and also at the wrong place, as explained to you in the previous video. However, if we want to avoid making trading mistakes, we must work with market patterns. Very important, market pattern, key levels, without ignoring the economy news. Check the economy news at forexfactory.com. Know when the high impact news are due. Sometimes it's better to wait. The economy news release. The DAS has settled. And a market is open. For TSCW24 traders, wait until the market is open. London is open at 8 a.m. London time. That's 3 a.m. Eastern time. Wait for New York to open. When New York is open, very important, wait 30 minutes. So at 10 a.m. Eastern time, 3 p.m. At 10 a.m. Eastern time, 3 p.m. London time, when New York is open, wait for the best setup steadily, and use the market pattern, the key level, make your decisions around key level. Sometimes you see a beautiful setup, but it's not at the key level. You want to see a bullish setup at a value support zone. You want to see a bearish setup at a resistance zone. That's why it's so important to know where are the key level, the support, the resistance, the trend line, in order to trade on the edge. This is the end of this video about how to trade Forex under pressure. In this video, we have talked about high frequency Forex trading, their implication, their influence in the Forex market. We have also talked about the distortion that is taking place in the Forex market. We have talked about the pound-dollar currency pair trading, and we talk about the euro-dollar. The trend is bearish and the market sentiment is bearish. I have also highlighted the cause or the reasons why the market is bearish towards the euro USD. We talk about the correlation between currency pair, and I gave you few FS trading tips. If you like this video, give us the thumbs up. If you dislike it, give us the thumbs down. If you have any comment, put it below. All right, this video is not confidential. Feel free to share it on Google Plus and also on the social website. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.